Hey there, YouTube. So in this video, it's the weekend. I want to cover the charts and just really evaluate how everything's settled so that we can be prepared for next week. And we'll just get into all the markets. We'll get into some specific charts on certain stocks. Just try to evaluate where the market's heading. So we closed the week in a pretty bullish stance. And so let's go ahead and look at that and try to determine if that's going to continue or if we're getting stretched and we're getting close to a reversal. So let's go ahead and look at it. We'll start out with the Qs. We'll work our way through the SPY and into specific charts. We'll look at gold and then we'll wrap. So here's the Qs, and I've been outlining this bearish rising wedge, and we're looking at a weekly chart here. So trying to get a bigger picture. Oftentimes in the short term on the 1 minute, 5 minute, hourly chart, things can kind of get out of control or overshoot. But if you just keep the weekly chart in perspective, it'll give you the bigger term picture where markets should, even if they overshoot on an intraday chart, then they should continue to hold. Now, when the weekly starts to change or the monthly chart starts to change and you get a different look or a different pattern, then you have to change your strategy, change your sentiment. If you're bearish and the charts start to resolve bullish, then you need to change and look at things from a bullish angle. So let's go ahead and look at that. We'll start with the monthly here. This is the bearish rising wedge on the monthly chart, and really just keep an eye on the purple lines. Those are really all that matter. And for now, and the red line, this big long red line here, which is your decade-long bull market. So we're still within trend on the decade-long bull market with the triple Q. So technology has not broken down the bull market pattern. It's still bullish on that pattern. Now, if we look at, so just keep that in mind. We need, in order to say that the Qs is bearish, we need to see a monthly breakdown of the decade-long bull market. But oftentimes, that'll come on a pretty bad month, so we'll have to wait. That's a monthly close. We won't get the November monthly close till the end of November. But if you look at this bearish rising wedge here, all we've been doing is trading within that pattern and tightening. And here's November right here. We're right at the apex of this pattern. So November should be the month where the market's going to pick a direction on this bearish rising wedge. This really doesn't go beyond this month to the pattern. So we'll know if this bearish rising wedge was an accurate pattern and if it plays out to be bearish or if it's bullish. And we'll know by the end of the month. So that's good. The videos will start to change tune, or we'll confirm the bearish bias that we've had, or we'll have to flip and become bullish. So now let's dig into the weekly here. If you see on the weekly, again, we've just got this bearish rising wedge, and it's just been wedging up, and it's been tightening and tightening, and we're now coiled basically to the apex of the bearish rising wedge and pointed up as well. You can see, on the weekly, we kind of based along the bottom and ramped up into the top, and we closed the week. Really the week actually closed with a slight breakout of the pattern, but we'll get into that and the reason why we can't confirm that that's a breakout on this pattern yet. But you can see we've been coiled up. So it's either going to, ramp higher and break out to the upside, or we're going to, maybe do a slight fake out and then break down, and probably break down pretty impulsively to the downside. So that's what it looks like as of right now. I know I'm getting a lot of comments where people are saying, that this market's bullish and it's going to continue to go to highs, and it very well may, but we need to see the patterns that are setting up, which this is a bearish pattern. We need to see that resolve one way or the other. Here's the daily chart on the Qs. Again, here's your bearish rising wedge, been coiled And, you had a little breakdown right here. That was kind of a false breakdown, but it then snapped right back, recovered, and the daily closed. You can see we closed with a slight breakout to the upside on this pattern, but, just barely. And really, if you look at the breakdown, well, or the breakout, it was at the very end of the week. So, slight breakout as of right now, still bullish. You have to basically say, okay, that's bullish, but does this pattern hold true? And the pattern's a bearish pattern, so we have to keep an eye on that. Here's the hourly, and here's why I say that breakout is not anything to be, too worried about until next week. We'll get some more follow through one way or the other next week, and then maybe we can start to look at the bullish side of the chart and evaluate that. But here's the bearish rising wedge coiled. We've been coiling tighter and tighter until we're pretty much coiled, and you can see here's your breakout. It's in the very last hour, the very last candle. And a little ramp up on volume, nothing crazy, but they popped it in the very last hour to give the chart a bullish look at the close of the week. That's something that if I would not be just turned bullish on of the very last candle of the week. Oftentimes that's kind of a trick. That could be a trick. They want to, park the market in a very bullish stance for the end of the week. Everybody feels euphoric. Everybody feels great. Everybody thinks the bull case is, off to the races and because of the close. But really, if you look at it, we just barely broke resistance and on the very last candle. And let's break it down to the last 5-minute chart. And you can see on the 5-minute chart, there's this purple line. Here's your bullish rising wedge, the purple. And you can see that we were just hanging around resistance the entire day, and in the last 5-minute candle, they popped it. So that's nothing to just be overwhelmingly bullish about when you pop it in the last 5 minutes. Institutions aren't jumping into the market in the last 5 minutes on a Friday close because all of a sudden they flip bullish. This held resistance the entire day and popped in the last 5 minutes. And then if you look at the last the 1-minute chart, you can see just an end of the day ramp. And what is this? Is this the plunge protection team coming in and buying when liquidity is really thin, and they come in and buy and pop the market up to park it at a euphoric close, a breakout close? Who knows? Next week you're going to see follow through. If this is bullish and institutions are jumping on, we'll see this start to, this will firm up around this level. We'll hold above resistance and we'll start to move higher. And at that point, we'll have to evaluate, my short position in Qs. I'll most likely look to cover that. If we start to firm up and start to move higher outside of this wedge, we'll look to cover that. And then I'll look to just, if I want to get short again, I'll just look for us to break, back down within this wedge level. And then we'll just get short again on impulsive breakdown. But that's how this is looking. So just keep in mind the bigger picture that the breakout on this chart was not anything spectacular. It happened in the last 8 minutes of Friday's close. So is that a trick? Are they trying to trick everyone and park it so everybody thinks the market's going to continue to break to new highs? Maybe. We'll find out next week. Let's move on to the SPY. The SPY, I don't need to get into that much detail on the SPY because the SPY has been trading below the long-term. Let me go to the monthly. SPYs broke down out of the long-term bull market trend a long time ago, and so that is not anything to me that's bearish. Even though it continues to backtest and climb higher, it's below trend. And so that's one of the reasons why I've had a bearish sentiment in the markets, is that the major index broke down out of its long-term trend. So yes, it continues to make new highs, but those are all done beneath trend. And that's the trap, that's the trick, or at least I think it is. You trick people into not looking at trend lines or anything. All they see is price and all-time new highs and headlines, euphoria, even and it's below trend. I mean, if I take away the trend lines, this just looks like a bullish chart going to new highs. Put the trend line back on, and it changes the posture. Oh, we're below trend. We're back testing. We might fail You know, we might backtest a little bit longer and then fail. I mean, ultimately, we could get all the way up to this 322. So we'll have to keep watching this. There might be an opportunity to go long on a continued backtest, ramping up into this 322 level on the SPY, and then we could look to get flip short. That might be something that we can look at. I need to see the Qs break out to the upside out of that bearish pattern that it has in order to start to evaluate that. And then if we just break the SPY down to the hourly here, we go to hourly, it's in this upward price channel right here, and we closed Friday at the very top of the channel. To me, that looks like a pretty good short. I mean, unless we break to the upside of the upward channel and break out of it, which is possible. But while it's in this channel, you want to trade the channel. I mean, and that means you short at the top of the channel, and you could go long at the bottom until there's a change in the channel. You could continue to do that. So that would be a short on that one. All right, so let's look at Apple. Apple's a chart that I called out. I put out a video on a possible short opportunity. I still think there's a possible short opportunity. I haven't taken it short or anything. I just put it out there as an idea at a level. You know, it was a setup, but it wasn't a trigger. You know, the difference between a setup and a trigger is the setup is a possible trade if it sets up and then if it triggers. And we didn't see the trigger, so. But what we had here is, if you look at the daily, here the black line that I've got is your long-term, decade-long bull market trend line. We're trading below that trend line just like the SPY is, and we backtested once right here, and then on Friday we were backtesting again. We actually backtested right here a couple days ago, sold off, and then we really just kind of ramped up and really broke that resistance. So that's pretty bullish. I mean, that's not a bearish breakout. What I need to see is follow through. Do we now does this sell off and then hold and then start to move higher? If that does happen, that's pretty bullish, and I would expect the Qs to break out of that bearish pattern to the upside. Or is this just the blow off top, where you spike it above resistance on a kind of a momentum overshoot, and then this fades and we close next week back within this trend? If we close back down below on a daily close, excuse me, then that's bearish. That would be a recovery of resistance, and you'd expect that this will hold as resistance, and this was a back test and will start to fade. So again, not a trade, just a setup, but the setup is still there. You just need to wait to see what it does. What I would be looking to do is get short this Apple if we sell off and recover back below a daily close below this resistance line. If that happens, and it will probably be pretty impulsive, either a gap down or a strong sell-off intraday, I'd look to get short, and I'd stay short and then just set a stop back above this resistance line. So, and I would just stay short and let this thing roll over, and then stop out if we pop it back above resistance. That's the setup. So it's a trade if that setup triggers. It's not a trade if it doesn't trigger. To get long this, that's tricky. I wouldn't be getting long right here. This thing's just gone almost parabolic. You can see it's pretty much just gone straight up. We might have another day of another ramp higher next week, maybe Monday. But at this point, it's gone pretty parabolic. And usually when the stocks go like that, they can go a little bit longer, maybe look like this. We could continue to grind higher. But what I would, if I was going to go long this stock, I would look for a back test of this resistance line here. Let's draw it a little longer. Look for a back test, look for it to hold, and then look for it to break above these highs again. So if we can back test, hold, and then start to move higher and break, you could get long Apple and then just set a stop right below this trend line right here. If we sell off and recover this, then you could stop out below the support. So this resistance line is now support. Either way, you look for a back test of the support and then a successful back test and move higher, or a breakdown of support, which would then become resistance. That's Apple. That's the. All right, so let's get into gold and then we'll wrap up this video. So gold, the reason why you need to be interested in gold mining stocks, things like that, is because they're a direct play on the Fed, and the market has been induced by the Fed. I'm going to put out a video pretty soon to talk about how the market has been moving higher and what the Fed's been doing along the as it's been moving higher. And we're going to line that up and really try to determine, is this market growing on strength, or is this market growing, and moving higher on Fed stimulus? And that's my hypothesis, but we need to, evaluate that, and we need to pay attention to gold. So the Fed came out and said in their meeting last week that they're not going to raise interest rates until they pretty much see inflation, pretty substantial inflation. And I've been anticipating that for the most part. When the Fed was hiking, I figured they couldn't hike that far. That's why I was interested in SBRA, the healthcare REIT. And that's because REITs are commercial real estate. Commercial real estate is very dependent on interest rates and very sensitive to them. And I figured that the Fed was hiking, but they can't go that high, and that's because the debts and the deficits for the nation and the federal government is just past 23 trillion, and is climbing pretty substantially, and that debt has to be serviced, and interest rates take a huge impact on their ability to service that debt. And so that is why I figured the Fed's not going to be able to raise interest rates. They're going to have to basically cut, stimulus, all that. And that's why I've been interested in gold. So far, I've been right on the gold trade and the gold side of things. I've been wrong as of right now on the short side of things, shorting the market, at least in the bigger picture. But I've been right on the gold. So that's kind of why my strategy, because I haven't known exactly what's going to happen, it has been to short the market, but then also hedge with gold and gold miners. And that's because I don't know if the Fed is going to let the market move down so that they can keep the dollar strong, or if they're going to sacrifice the dollar and in order to prop the markets up. Ultimately, the markets are coming down, and they're going to come down in a pretty big way because of all this Fed stimulus that has pumped the markets up. But we don't know when that is, so we need to just continue to kind of trade the charts. But ultimately, we keep our hedge on gold. And here's gold. Here's what's happening on gold. We broke out of this bearish pattern on Friday. But again, it's on Friday. It's at the very end of the day. Nothing that I'm going to just bite onto. But here's this, but the longer term, bigger picture charts on gold are bullish. If I go to, here's a monthly chart, you can see here's your breakout, nice rounding bottom right here. You had a breakout, you've been flagging, and now it looks like we're going to start to run higher and break out of this flag. So that's something to watch. Here's, November is right here. We could continue flagging, or we could break out, but ultimately, it's a bullish chart. We've been flagging, we broke higher, we're flagging again. We should continue breaking higher. So it's a bullish chart. Gold should be bought on weakness. And here's a daily chart. Just closed it right at it. So where do we go? Ultimately the Fed has basically said they're not going to hike interest rates. They're going to allow inflation to run, and gold loves that. So gold should continue to run. Here's Barrett gold. You can see we broke out, and then we had this sell-off, pretty sharp sell-off, kind of a gap down and then a crash, and then we just been back testing, and then we started to run higher in the last little bit on Friday. But again, it's just Friday, so let's see where this goes. This looks like it's is starting to break out and wants to run higher. So I will be looking to load back up on this if it does continue to move higher. This is an area that you could add. You could have added on Friday and possibly Monday, depending on where it's at. But again, because of the charts, how they closed right at resistance, just right there, gold is right there at support. Everything was kind of right at the levels where a big change could happen. I didn't want to take a position at that level. I need to see some confirmation on everything. So anyways, gold is right there. It could break higher. I'll be looking to add if we start to see that price action. And then here's the dollar. The dollar is, we've got this line here. Let me mark this in purple. And we've got the line here. There it is. and we broke down, we back tested, and we sold off. And the dollar has pointed down. So it looks like the Fed is achieving exactly what they want to do, which is weaken the dollar. And that's a hidden tax, basically. The stock market goes higher, and everybody who earns a salary or has savings or pension funds that are trying to get any kind of return are losing value, purchasing power in the dollar, but nobody notices because the stock market's moving higher and everybody can tout how amazing everything is. And yet the dollar, the strength of the dollar is losing value. So that's, maybe you make some money in the stock market, you sell your stocks for dollars, you go to buy something and prices have risen quite a bit because the dollar lost value. And that's kind of what maybe is going to happen. And that's why we continue to look at gold and gold miners. So let's see, does this continue to sell off? And if this does, this looks like it's positioned to make a nice strong leg down. We'll, probably have a little kickback rally and continue to run down. Ultimately, possibly, we're probably heading down here to this 93, this lower channel. And if we break that, then, the dollar's going to have a pretty good crash. If that happens, you can expect bonds to have a pretty good crash as well, because bonds are basically future dollars. Bonds are paid in dollars and they're set on interest rates. And if bonds, if the dollar starts moving down aggressively, bonds are going to move down pretty aggressively as well. Rates are going to spike. And that's the thing. The Fed will try to control rates. But when the bond market starts to sell off because the dollar starts moving a lot lower, they're not going to be able to, stop that tidal wave of sellers. And so rates will rise, even though the Fed doesn't want them to rise, they'll rise. Essentially the Fed will lose control. That's what happens sometimes. The market takes back control, and that's really when you get the clearing of markets. And the Fed tries to control markets as long as they can. Eventually they lose control. Markets clear naturally, and they clear in a violent way because of the manipulation that took place during the Fed, support years. So that's a possibility. We don't know, but if the dollar continues to sell off, let's watch bonds and see if they start to sell off. If interest rates start to rise and they rise substantially, then you should expect stocks to sell off at that point in time. So stocks can continue to move higher, but when you start to see rates rise and the dollar sell off, that's going to be pretty nasty. And in that situation, gold is the best bet. So gold has been really gold and gold miners. That's why if you go back to my videos over a year and a half, excuse me, I've constantly talked about gold, Barrett gold, gold mining stocks, and that's because it's my best bet, because that's because the Federal Reserve, the debt, all that, and it's all playing into gold, and it's all continued to firm up the gold case over the last year. We've had rate hikes, they stopped, they paused, they started cutting. We'll get into the balance sheet and all that in a different video, but gold seems to be the most sure thing, I guess, the best lock trade that you could basically do. Shorting the market is more of just a technical trade. I short the market when I see bearish patterns, and when the bearish patterns don't exist anymore, I won't short the market. But gold continues to look like a good bet. It looks to be bullish. It looks to like we've started a new bull market. Now we're seeing the dollar starting to fall, whereas before, when gold was rising, the dollar was still rising. Now the dollar is starting to show some weakness. So let's continue to watch this, and we'll continue to see if this firms up. That's it for the video. Everyone have a great weekend. I'll catch you next week.